Hi guys, welcome to another trade recap. Today we're going to be looking at euro dollar, which was a short position that I took on the 25th of June 2021. So at the minute you can see I've just pulled back the candles so that we can go back to this morning's price action. But I've left my analysis on there so that we can sort of see how price reacts as we play through the day. Now this was a losing trade. I wasn't in the trade very long. I think it was 15 minutes. I was in with a super tight stop. It was 6.3 pips. So it was sort of, if I was wrong on the idea, I would get taken out pretty quickly. Not all trades are winners, obviously. So I sort of want to document these losers as well, and sort of get the message out there that these losing trades do happen, and how you can analyze them, take stuff from them, and make sure that you're sort of learning from your not so much your mistakes, but essentially if your trade idea is incorrect, I think it was said by Tom Dante, if your trade idea is incorrect, it's not just a bad trade, it's the fact you read the market wrong. Okay, so the market is telling you a story every day. If you lose a trade, yeah, losing trades happen, but you read the market wrong in that scenario, which is exactly what happened today. So I actually put a trade recap up yesterday. We was in euro dollar longs. From this point, we rode it from this section of the chart here up to here, and then closed for 2R because of the Bank of England interest rate decision. And then coming into today, the problem that I had personally with this trade is that I ignored my higher time frame bias from the day before. Okay, so I've actually got this purple zone here is a H4 zone where I look to do sort of business in, and it was an area that I was looking for price to react from and come to. I actually say if you want to go back so that you can hear me talk about it sort of yesterday, I would definitely go and watch that when price was back here, because I do say that price, it looks like price wants to come and tap this level. Just jump onto the daily so that you can see this level sort of in full effect. Yeah, so historically you can see some resistance there. Some resistance here, support, resistance. Not the cleanest level back there, but then, you know, we start finding resistance here, some support, resistance, support again. So it was just it was an ideal level after this FOMC break. Sorry, I'm into my words. It was FOMC last Thursday, I believe it was, on the 16th. And EU just had a massive sell-off post FOMC press conference. Coming into this week. Now, this week I was looking for some mean reversion to come and fill this fair value gap up here, and the sort of ideal price that I thought price would pull back to before potentially going lower was this 198.859, just because that's the median sort of this level that I've found. Potentially come up to hit the key psychological level of 120s. As we know, central banks like these key levels, you know, the levels that end in 500 or 000. So that was an area of interest for me. Now, coming into today, I sort of ignored that bias. And potentially it was a bit of complacency, thinking, you know, I took a long from this area yesterday within this green kill zone, took a long, took some profit, come in today thinking, okay, I can short back down to that area and potentially look for longs again. So my analysis was, we opened, we come into the Asian session, we form a low back down near this kill zone. We spike away. That's clearly a big order entry in the market there, albeit having low liquidity within the Asian session. Still relatively big order to move the market in such a fashion. Left these relative equal highs on the 5-minute time frame, spiked away, and then we come back up. Now, as we come back up, and we see this, I think it was the next candle. As I saw this candle, this looks really nice. The fact that we've moved away from this high of the Asian session at 215. And 315, is that 215? 230, sorry, and 315. We've come and spiked into the liquidity from the Asian session, which, if you know how we trade Asian raids, or what we call Asian raids. Pretty much every week we'll have one or two of these sells, and they usually, the strike rate is pretty effective for these for this strategy on euro dollar and pound dollar. Now, as we come into this, I sort of like this price action because I do sometimes look for entries on the 1 minute. We look for the point of release of the large orders. We call them big player stacks. And it's just where we see big players in institutions, hedge funds, central banks. We see them offloading their positions into the market. So we are having this price action push down, which to me was a really nice sign. The fact that we are seeing price like a momentum to the downside and then we're seeing like the algorithms buy price back up into their entry level. This orange box I'll just drop down. Oh, sorry, I'm on the 5 minute, not the 15 minute, not the 5 minute. This was the 5 minute market structure I wanted to see broken, which it did here. And then this is where I entered my order. Okay, the point of release for the order on the 1 minute is this orange box. So this is where the last sort of price actions pushed up to get the best possible entry, where the big players go, okay, now we're offloading the rest of our positions, which they did here and here. So this was looking really nice for a short position coming into today. Just jump back onto the 5 minute as well, so there's not too many candles. The next candle, sorry, not the next candle, but the candle after that, tagged us into the order. And it looked really good, like we sort of had left a 5 minute wick up in the order. Looking at that, I sort of felt good about the position on London Open. It was obviously half an hour into the Open, so we missed the initial sort of volatility around 8 to half 8, whilst the big players are sort of, getting their positions off in the market. Play forward 5 minutes, started to look, still pretty decent, and then all of a sudden 5 minutes later, price just rocketed and took us out. Now, if we play through the rest of the day, you can see price really wants to come higher. Okay, we just keep forming down, form a support base here, and we come up to where price is currently trading now, 119.54. So you can see there was pretty much no profit within this position. I think the maximum favourable excursion for this was like 2 pips max. If we just, okay, so 1 pip. So it wasn't a great position. We read the markets wrong. I ignored my high time frame bias from the day before. Because what you can see is this is where I offloaded my order yesterday. We actually come back down, spiked, took the liquidity below that order. Now I was out of it by this point, but this is still a valid zone. Yeah, still a valid zone. And clearly the big player stacks offloaded more position. Coming into today, price just there was no sellers up here, so price was just forced higher. And we actually come close. I think it was about 10 pips away from this very peak. Yeah, so 10.4 pips away to the level that I identified yesterday. So what can I take away from this trade? First thing first is I'm going to take away the fact that I ignore my high time frame bias. Okay. Now, with these Asian raids specifically, I don't always trade with a high time frame bias because you can get a nice 15 to 20 pip move without a high time frame bias. But HTF is something that you want to take into account every day anyway, because I was bullish this week on EU as we sort of came away from this area. And looking back now, I'll jump on the 15 minute again so that it just looks a little bit cleaner. You can see that the support was pretty evident. Yeah, every time we spiked lower, we actually made a higher high. And we come leaving these like zones of business that we call them, and just spiking away each time. And now we've formed another high. So I'm pretty confident that if it wasn't a Friday afternoon, we'd have hit this 1985 level. But now, as we are currently, at the time of recording, it's 4 p.m. on a Friday. Liquidity does seem to wean off at this time as the institutions and the hedge funds will exit their positions for the week. So yeah, what I'm going to do now is just play a short clip of the live playthrough of the trade. You'll see, the trade going to stop loss. Again, we want to be fully transparent with our positions. You can check out my effects book. I link it to a trade with FTMO account, so you have to relink every month, which is why my account will have multiple accounts. But you'll be able to see these positions on there. And I'm being fully transparent with everything, showing the losses as well as showing the winners, which not a lot of people do in this industry. But these days happen. But just to put it into perspective, on this position yesterday, we ended up 2R in profit, right? Today, minus 1R. So overall, for the past 2 days, we're still plus 1R, yeah? So even though we had a loser, we had a winner that sort of overcome this loser and more, which is sort of the key to long-term profitability, making your winners bigger and making your losers smaller, and making sure that's the ratio that you're going with and not the other way around. If your winners are smaller than your losers, something's going wrong, and that's something that you need to address going forward as a trader. Otherwise, you're really going to struggle to find long-term consistency and long-term profitability if you have a negative strike rate and a negative expectancy. But yeah, we'll see you in the next one, and hopefully next week we'll be able to grab another nice trade. and not take a stop again. But it is what it is. We move on. These things happen. It's the name of the game.